Welcome to Part 4 of our lecture on what government does. This is the final part of this lecture. In Part 3, we learned about how the government pays for federal programs. In this part of the lecture, we will consider what is distinctive about the American way of government. At the end of this part of the lecture, you will be able to understand what is meant by a submerged state. You will be able to explain how tax expenditures work and who they benefit. You will be able to describe government by proxy, and you will be able to summarize American attitudes toward government programs and federal spending. To start this part of the lecture, I would like you to ask yourself how big a role you think the federal government plays in your everyday life. Have you or your family ever received a federal benefit? If you are like most Americans, you probably don't think that what happens in Washington affects your day-to-day living. You may also not be able to recall ever receiving a federal benefit. The reality is that most Americans do receive federal benefits from the government. They are just often unaware of them because of the stealthy way that the American federal government implements its policies and distributes its benefits. We can use the concepts of the submerged state and government by proxy to describe the behavior of the federal government and to explain why people don't always notice its impact on their lives. In the submerged state, Suzanne Mettler examines how the federal government conveys benefits to middle-class and wealthy Americans through the tax code. While poor Americans who receive a welfare check each and every month are more likely to be aware of the federal benefits they are receiving, middle-class and wealthy Americans may not regard tax credits or deductions as a benefit from the federal government, but that is exactly what they are. The technical term for them is a tax expenditure. A tax expenditure is any sort of tax benefit that is intended to encourage a particular behavior. Let's look at a stylized example of how tax expenditures can be used to provide federal benefits to middle-income and wealthy Americans. First, let's imagine three people: a poor person, a middle-income person, and a wealthy person. The poor person brings home about $1,000 a month. The middle-income person earns $10,000 a month, and the wealthy person makes $100,000 a month. The middle-income and wealthy people are homeowners. The middle-income person pays $3,000 a month in housing, and the wealthy person pays $20,000 a month in housing. Housing costs take up a larger portion of the income of the poor person than the wealthy person. The poor person pays 40% of his income to housing. The middle-income person pays 30%, and the wealthy person pays 20%. This example is pretty true to life. Poor people do pay a much larger portion of their income to housing costs and other basic necessities than do wealthy Americans. The federal government has decided to implement a housing voucher program to help the lower-income Americans who struggle with housing costs. They send them a housing voucher each month to pay a portion of their rent. This is a direct benefit. A program like this really does exist, and it's called Section 8 housing. It's basically food stamps for housing costs. The poor person gets a $200 housing voucher because they need a lot of help. The middle-income person gets $100 from a housing voucher because they need just some help. And the wealthy person gets no voucher because they really don't need any help at all. With this voucher program, we can see that the poor person now pays $200 in housing, the middle-income person pays $2,900, and the wealthy person still pays $20,000. This reduces the housing costs of the low-income person so that now only 20% of their income goes to housing costs. They're doing about as well as the wealthy person in that regard, actually. Now let's say that the federal government decides they want to encourage homeownership. So they implement a tax policy that allows homeowners to deduct anything they pay toward the interest on their mortgage from their taxable income. The poor person can't deduct anything because he is a renter. The middle-income person is able to deduct a small amount, which amounts to a tax subsidy of $350. The wealthy person has an expensive home and pays a lot of interest on their mortgage, so they are able to deduct $4,000. We can think of these subsidies as a reduction in housing costs. The end result is that after the housing voucher and tax benefit, the poor person saves $200 in housing costs, The middle-income person saves $350, and the wealthy person saves $4,000. And as a percent of income, the low-income person now pays 20% of their salary to housing, the middle-income person pays 26.5%, and the high-income person pays 16%. The wealthy person really gets the best deal, both in terms of the size of the raw benefits and in terms of how much of his income goes towards housing. The housing voucher obviously represents direct spending by the federal government. But because the tax expenditures reduce the revenue that the federal government would have otherwise collected, we can also think of them as government spending. Between the two, the federal government is spending roughly $4,550 on these three people. 90% of these expenditures are going to the wealthy person. In effect, we have created a transfer from poor renters and middle-class homeowners to rich homeowners. Even though the wealthy person might not recognize it, they have received a relatively large federal benefit. Just how much does the federal government spend on tax expenditures like this? As this graph shows, over 50% of all tax expenditures go to Americans in the top income quintile. Those in the lowest income quintile receive less than 10% of tax expenditures. Those in the middle don't do a whole lot better than those in the lowest. In addition to using the tax code as a way to discreetly convey benefits, the United States government often engages in governance by proxy. What is government by proxy? Rather than have the federal bureaucracy implement programs directly, the federal government relies on other organizations to do it for them. These include state and local governments, for-profit and not-for-profit providers. This means that even when using government services, Americans may not realize that the benefits are coming from the federal government. We can use federal Pell Grants as a relevant example of this. Even though Pell Grants come from the federal government, the final award amounts are decided and distributed by colleges and universities. Pell Grant students never receive any money or communication directly from the federal government. It's all routed through their school. So they might actually not know that they are receiving a government benefit. The STAR acronym is a useful way for quickly and simply explaining how the American federal government implements policy. S stands for subsidies that are paid to particular groups or organizations. T for transfers of money to state and local governments. A for awarding grants or contracts to for-profit firms and nonprofit organizations. And R, regulations are devised and enforced on society and the economy. Why do we have a submerged state and government by proxy? Why is the federal government so stealthy in how it implements public policy and distributes benefits? The answer is that Americans are ambivalent about government. They distrust government and claim they want it to be smaller. But Americans actually love government services and reject cutting spending on specific programs. The following graphs show that in 2013, 53% of Americans felt that the federal government threatened their personal rights and freedoms, and 56% wanted smaller government providing fewer services, compared to only 35% who wanted larger government with more services. But when asked about cutting spending for specific programs, most Americans say that spending should remain the same or even be larger. For example, 53% of Americans say that more spending should go to veterans' benefits. In fact, the only program that has a simple majority in favor of cutting spending is international aid. Americans are also ambivalent about taxes. Most Americans think that they pay too much in taxes, but believe that the wealthy should pay more. They generally regard the tax code as too complex and unfair. The lack of transparency in government services is regarded differently by liberals and conservatives. Liberals argue that if people understood how many services they get, they would feel grateful and would want more government spending. They believe that government services and benefits should be administered more directly by the federal government to make people more aware of what they're getting. On the other hand, conservatives believe that if people understood the inefficiencies of government by proxy, they would want less government. We are now at the end of Part 4 of our lecture on what government does. Don't forget to answer the review questions on the material that was just covered. Since this is the last part of our lecture on what government does, let's recap what we have covered across all 4 parts. First, the federal government acts like an insurance company with an army. 2/3 of federal spending go to either social insurance programs or defense spending. While overall federal spending in the United States is not that different from other industrialized countries, defense spending is substantially larger. Second, there are both social benefits and policy challenges associated with America's largest programs. These programs include Social Security, Medicare, Medicaid, and the military. Third, spending on these programs is paid for primarily by individual income and payroll taxes. Finally, one thing that makes the American federal government distinctive is that it implements many of its services in indirect ways, either through the submerged state or through government by proxy. Now that we have covered what the federal government does and the policy challenges associated with some of their activities, we can pose one of our first political policy analysis puzzles. Who would gain and who would lose from reducing tax expenditures or replacing contractors with government employees? How much political power do these potential winners and losers have? And, based on that, how likely are these types of policy changes? Spend some time thinking about these puzzles. In the upcoming weeks, you will build the intellectual toolkit that you need to answer them. Thanks for watching.